Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, the coronavirus is getting all the blame for the dramatic drop in the equity markets, but for you, this wasn't a surprise, and you had already warned that the markets were ripe for a fall before the virus got the blame.
Yeah, I mean, you know, every time there's a big sell-off or a market crash or a bear market even, you know, everyone seems to blame some type of big headline news or some type of event that happened near there. And maybe the coronavirus, you know, is a good chunk of this kind of sell-off in the equities market, but really, the market, to me, as a technical trader, we were following it, and we actually had a sell signal to get out of the equities market, get long bonds 2 days before the market crash. And, I mean, it couldn't have been better timing. You know, there's always a portion of trading that is always a bit of luck. The sell-off was a lot bigger than what I was expecting. But overall, the market was telling us a pullback was coming, and this pullback that's happening now is actually a lot similar to what we saw back in 2015 when the market had a huge sell-off. There's some really interesting characteristics in the market, but, you know, I wouldn't say this whole drop is based on the coronavirus, although it's definitely helping, I think, add some more fear to investors and traders and giving them that extra kind of kick to maybe, you know, eject out of some of their trades and sell. So, it's helping, I would think, drive prices lower, but I don't really think it's a full, you know, reason the markets are selling off, because they were primed and ready before this hit.
Now, we've had an overall bull market for the last 12 years, but there have been corrections along the way, and the question usually is this a correction, or is this a major market dump leading to recession?
Right, and of course, yeah, we never know until it happens, but I mean, we have a series of these big pullbacks. I mean, 2018, we had about a 20% pullback in the market, and then we rallied up to all-time highs. Right now, we're at about a 15% pullback this year. So we're not anything out of the norm. I mean, these are pretty severe pullbacks, but it doesn't mean we're starting a bear market. It doesn't mean it's out of the norm. They're very normal, and I mean, people just aren't expecting them when they happen, and that's kind of why they happen, is when everyone is oblivious to the idea when life is good and their stocks keep going up. You know, when you're feeling really good as a trader or an investor, that's usually when you're about to get, you know, hit real hard with something, and it's a wake-up call, and that's what these are. It's just everyone is so in love with this bull market that's been going on for, 12 years. They just keep getting, they're not stressed about it. They're very complacent. And when everyone seems to be complacent to a certain level, we have these big sell-offs. And, we had a big sell-off in two of them in 2018, one this year. It's just people keep reaching that complacency level very quickly, which means we're frothy in a bull market, have been for a couple of years. But, until the markets and the price turns down and confirms from a technical standpoint that we're in a bear market, you got to still be bullish. We're still long equities. Long-term wise, you should be long equities. We're not entering a bear market by any means yet.
The central banks in Canada and the U.S. cut their trend-setting rate by 0.5% earlier in the week, saying it was an emergency move to help support the markets or the economy during the coronavirus emergency. However, we have yet to see any kind of real emergency happen, and will a cut in interest rates really affect what's going on right now? Yeah,
that whole 0.5% rate is just to me is huge, and there's no point to be just tossing out 0.5%. I mean, they're throwing some extra bullets out the window, maybe a quarter basis points to show they're there to help support, but I don't think they should be, doing any more than 0.25%. They're going to need lots of bullets in their gun when things start to get ugly. All we're doing is we're pulling back a bit from some new all-time highs. For them to be panicking and freaking out on really what is just a normal pullback, it's not all that severe in the grand scheme of things, is kind of scary, because what do they know that we don't know? If they're really, are they that emotional, or is there something that bad behind the scenes unfolding? And unfortunately, my gut says there's something really bad, and it has been brewing for years. And I think a lot of people will agree with that. The financial systems are corrupt and broken, and they're out of whack. And really, I mean, someday, hopefully, we don't have to experience, but there could be some nasty financial reset. And that's one of the reasons why I think gold is shining. It's, hitting new highs, testing highs. We're getting, pretty lofty in gold, and that's a sign that people are afraid.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, if people are bailing out of the equity market, where are they parking their money right now?
Well, I mean, in the last month and a half, they've been piling into bonds. If you look at bonds, they're going parabolic this week. More or less, the TLT, which is the long-term bond ETF, there's no leverage in it. If bonds opened up over 5% higher today, and I've been talking to subscribers saying, here comes some type of blow off top. This is near the end. And right now, it's just herd mentality is what's going on. Extreme volatility is somewhat very predictable because they all do the same thing, and they all happen to do it kind of at the same time. So everyone in the last couple of sessions has been moving out of equities, just giving up. They're completely afraid of stocks, and they're all moving into bonds. And they are moving into gold, but more so bonds, because bonds are more or less, everyone's either long equities or bonds, and so investors naturally go to what they're most comfortable with, and traders, which is go to bonds, and that's where everyone is piling into. And today is a huge day for bonds, up over 5.5%, and I have a feeling it's going to be the top. And this is what happens. Everybody's panicking out of the stock market. We're right near a low, I think a significant low for stocks. And they're all moving into bonds when it's just rallied. We closed out our bond trade this morning for over 20% in TLT. And here's the thing. Everyone is buying into TLT today. And that's just, it's herd mentality. Everybody panics out of the stocks at the wrong time. They get into new trades at the exact, worst possible time. That's what happens when there's high volatility. Fear is everywhere, and people are trading off emotion. So I love this type of price action. We have done exceptionally well in this last market crash, catching bonds, and now we're in cash, because now it's just going to be volatility, I think, for a few weeks, huge back-to-back swings. Just look at equities. They're up 4% one day, down 4% the next day, up 5% the next day, down 4% the next day. It's all over the place. So, we played that trend, we've caught the emotion, and now we sit back and we just let everybody panic, let the market settle down. We'll be looking for new setups in precious metals, potentially shorting bonds or getting long equities. So there's going to be some new, really big trend trades to be taken here, but the market needs to shake itself out and it's better to watch from the sidelines now, because now it's very much so gambling.
We'll have more with Chris Vermeulen right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, gold has been skyrocketing over the past half a year. What do you expect to continue?
Yeah, well, gold is seen as the global safe haven, the global kind of currency, and of course it broke into a bull market mid last year, and it's been on a tear to the upside. It's forming, it rallies, takes a breather for a few months, rallies again, takes a breather for a month or two, and here we are pushing back up to some very significant highs. We're at that 1,677 level on gold, and if we were to look long-term back to the charts, back when gold topped in 2011, 2012, we are right in the middle of that previous major topping phase from 2011, 2012. So gold here, it is getting to major resistance, and it makes sense. We've had a beautiful rally in early 2019, consolidated for half of the year, and now we're rallying back up for a full 100% measured move up to this around 1,700 area, which is a major resistance from 2011, 2012. I think most of gold's upside move is actually done for a couple months. I think we could see gold sidestep for 2, 3, 4 months here, and the stock market is going to be, which is oversold, is going to bounce and rally. And then I think things will eventually kind of catch up, and the stock market will start to sell off, and gold will break out, and I think we could see gold break those 2011 highs and get above that 2,000 mark. I think it could be very significant. But short-term wise, I think most of the move in gold in bonds are actually kind of done for the moment, and the play is going to be in equities, I think, going long here, being long equities, which goes against the grain, and everyone is selling equities right now, which is one of the reasons why I think it's going to be a top-performing asset over the next couple weeks.
Is this a good time to look at producing gold juniors?
I would think so. I mean, gold prices going up. You can't go wrong getting those juniors, which have huge leverage. On as gold rises, they just make exponentially higher growth. So, it's interesting because the gold miners, whether they're the large caps or the juniors, they haven't broken into a bull market yet. Gold broke into one last year, clear as day. Gold miners, large and small, silver miners, and silver bullion are still in that multi-year base. They just haven't performed well. And I think there's going to be a time when I think they break out and things are going to go ballistic. And I think the juniors are the place to be when that happens. But we're not there yet. And they tried to break out about a week and a half ago, and then huge selling came in and just clobbered them. And they've been plagued with strong bouts of selling for years. So until we can break out, hold the breakout, you got to be a little bit wary on the gold miners. I mean, we played gold miners for that rally up, and we did really well. It's about a 10% move on juniors getting out on the high before it crashed about a week and a half ago. But it's only for short-term trading right now. They are not in a bull market yet.
What's going on with Bitcoin during all of this fuss over the equity markets?
Yeah, I haven't heard a whole lot about Bitcoin. I mean, to me, it's fallen right back off the radar. I don't follow it too closely. I take a look at it usually once a day or once every other day, see what it's doing. I don't really trade it, although I find it interesting to watch it play. And surprisingly, it hasn't really had a huge move in this recent market crash. Actually, in fact, it's sold off with the stock market over the last week and a half, or 2 weeks. So it's interesting. I'm not a huge fan of Bitcoin, and there is a trust fund that you can trade the Bitcoin, but I mean, very rarely do I see a trade set up in it, and I'm kind of waiting for some bigger pattern trading sideways here. It's oscillating between more or less 9,000 and 10,500. I'm looking for some type of big, what would be kind of like a handle or a bull flag formation, and if that does form, I think it'll be off to the races for a big move back up to 14,000, potentially 20,000, but it's working itself out of this base that it's been in for quite some time, for several months, or for really, for about 6 or 7 months, and it's got to build a launch pad and start to break out of that before I'll get excited.
Crude oil, is it in for tough times with the number of cars sold in China dropping 80% recently and just fewer people driving because of the virus outbreak?
Yeah, crude has just been taking a beating. There has been no let up. And I mean, today it's down 8%, trading at 42. I mean, back when we had the big pop on the strike, back when it was trading up at $62, $65, I remember talking about saying, this looks like a shakeout. You and I had a conversation. I was saying, we're looking for that $51 per barrel. If it's broken, we're going down to 44. And that level got broken, and here we are at 44. And the next level is going to be around $33 per barrel. And it started to break down today. So it could really pick up even more speed here. It's at 42. It could drop another $9 from here. And it could go all the way back to the low that we saw a couple of years ago, which is around $26 per barrel. So it's taking a beating. I think it's starting to get oversold, but I mean, it is in a strong downtrend. The trend is down, and I think it could still go quite a bit lower. So unless you're short that or you buy an inverse ETF, you really want to steer clear of the energy area.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.